Hello everyone, welcome back to Money and Law with Nondiwiso Nchangase. For those of you who are new to the channel, please subscribe and also hit the notification bell so that you get notified when there is new content out. And please note that my videos don't constitute as financial advice. If you need financial advice, please consult with a person who's registered with the Financial Sector Conduct Authority. Ooh, that was a very long one. But anyway, yeah, so as you can see today, I have a guest. So if you do follow the channel, you would have seen that we've done a video before and you already know that today we're talking investments. So Uvugile Mkhize, he's an investment specialist. And as you know, we've seen obviously the markets have not really been doing very well. My portfolio is looking very red. So I was like, hey, Vugile, come and explain to people and also to me what's happening so that we understand why are investments sort of not thriving as they usually do? So yeah, I think
sure.
Do you want to start and just tell us why is my portfolio red?
Yeah, well, I mean, a lot has happened since the last time we spoke. I think when we last spoke, we're a year into COVID. And at that point, we were still thinking that this is the new way of life.
Yeah.
We're still very hopeful that people were going to take up vaccinations. Well, I'm not even sure if we would actually, if there was a vaccine at the time. But anyway, a lot has happened after that. I think the biggest themes that we saw include, I guess, the supply chain issues that we saw across the world.
Okay.
Where we saw that there was this demand and supply mismatch, which was caused by the fact that you had people basically not going to work, and those people who were able to keep their jobs had excess money since they were not traveling as much.
Oh yeah.
But on the other hand, you had companies not operational because of COVID and regulations linked to the pandemic.
Yeah.
So you had people with a lot of money to spend, but not a lot of products that were created because of COVID. And if you remember, services were not even available, like tourism wasn't a thing.
Yeah.
So if you had planned a trip to Bali, for example...
I actually did. Right. Said about it. Mm-hmm.
Yeah, all of a sudden you had this money that was just sitting there
and
you couldn't do anything. You couldn't go out partying and... you couldn't blow it on bottles, for example. So that created this demand and supply mismatch. This was at a very large scale. A case in point is what we saw with the electronic chip shortage.
Okay.
We saw electronics, the production of electronics being hampered by that. If you're looking for a car, for example, last year, if you're looking for the new C-Class or the new GTI, you would have noticed that stock was very limited, and that was linked to the chip shortage, which was, I guess, part of the broader supply chain issues that we had. And because of this, we saw increasing prices because I mean you have more demand than supply, so that tends to increase prices. Because if you have something that a lot of people want, you're going to increase your prices because you know
that's how they get us.
Yeah. So that's where I think that's where I'm going to start. And then we saw prices rising globally. We saw the price of oil rising eventually we saw the price of oil rising because when lockdown regulations were loosened, then we saw, I guess, more activity, just people driving around and such things.
Yeah.
As activity recovered. But the idea all along was that as soon as lockdown regulations are loosened, we're going to have people going back to work. We're going to have companies again producing at maximum capacity, and these supply demand mismatches were going to go away.
Yeah.
So that was the thinking. Initially the thinking was that by the end of last year this would have been fixed. But towards the end of last year, we realized that the world realized that things were going to take longer than expected, and the date was shifted to June this year. But in Feb this year, then we had the Russia-Ukraine war, which completely changed things. So Russia is a big oil exporter. They also export natural gas. they're also big on some foods as well, like wheat price, the wheat markets.
Yeah.
Russia and Ukraine make up about 25% of the global wheat markets.
Okay.
So when the war started, then we saw a lot of pain coming from higher oil prices, and this is where we were. I mean, SA is a case in point. We've been seeing the petrol price increasing, and that's been really painful.
Yeah,
right?
I know.
And that's fueled inflation. Inflation is basically, I guess, the measure of price increases. Mm-hmm. So you go today to buy bread for 15 rand. Next month at 16 rand, then inflation then will be the rate of change between those two prices.
So basically, the inflation is affected by the fact that we've had all these issues that you've just mentioned.
Yeah. Because I mean, with oil prices increasing, you have petrol prices increasing, and as you know, a lot of things are linked to transport. Right?
Yeah, true story.
Almost everything we consume is transported at some point, and those costs are factored into the cost of the products that we consume.
Yeah.
So with higher oil prices, it means higher input costs to the products that we use, and ultimately we're going to have to pay the higher price.
Yeah. Okay.
I guess higher prices.
That's actually a very nice and simple way of explaining inflation. I think it's the first time I've heard someone explain inflation so well.
Yeah.
Okay,
yeah.
Thank you for that.
So yeah, inflation is really painful because, I mean, if you were making, say, 10K a month, mm-hmm. and your costs were maybe 6K, say maybe you left with 4K.
Yeah.
But as the price of thing as the price of things as the prices increase, then maybe your cost won't be 6,000 anymore. Maybe it'll be 6.5.
Yeah.
So it means you have less money to spend on other things or to save.
Yeah.
And that's really painful because effectively you become poorer because your income maybe hasn't increased, but your cost of living has increased.
Yeah.
So, and this is something that's like a tax on us as consumers, especially poorer consumers, because they tend to spend more of their money on things like food. This is why then for central banks, controlling inflation is really important. So they try by all means to make sure that inflation is contained. Unfortunately, the major tool they use for this is through increasing interest rates. As we've been seeing the SARB increasing interest rates, and the idea is that you increase interest rates, and if Vugile was paying for a home loan, now Vugile is going to pay more towards his home loan, and he's going to spend less maybe on other things, or maybe he's going to start not going to maybe not traveling as much during the weekend.
Outside with group. You're no longer buying bottles.
Yeah, you're no longer buying bottles. It could also mean that you decide that, okay, maybe you don't need both Showmax and Netflix. Maybe you flog one and you keep one. So it does mean that there are a few changes that we will unfortunately have to make as individuals. But for investments, it also means that companies then will lose out in a way as consumers become poorer. Because if you are poorer, you're going to spend less.
Yeah.
And those companies will make less money and make less profits. So that's one way companies will be affected that you invested in. Just the fact that people are likely to spend less. Secondly, with higher interest rates, it means you're spending more towards servicing your debt.
Yeah.
Say for example, your debt, you were paying maybe 11% on your debt, and now rates have increased. Maybe now you're paying 12.
Yeah.
So as a company, then you'd have less profits because some of the money that you make will go towards servicing the debt. So that explains a lot of the pain we're seeing in the market, where a lot of companies unfortunately have seen decreases in their share prices as a result of higher interest rates and due to inflation, basically.
Oh wow, that's a very nice explanation. So basically, now that you've explained that, going forward, are we seeing things are going to change? Is it going? Because I mean, obviously, interest rates isab iyayinyusa iphinde yehlise.
Yeah.
So where at the time where they decide, okay, now we're going to decrease it, are we going to actually see also our investments in the the companies that we invested in sort of increasing or whatever? Like what do you think? Okay, yeah, that's the first question. Would see is that what's going to happen when they decrease it?
Yeah.
And the likelihood of that happening soon, what is because I'm tired of seeing red. I'm tired of seeing red.
Sure. Soon is soon. I mean, it's debatable when it's debatable when soon is. But for this year, no, I don't think so. I don't think there's going to be a time where we're going to be decreasing interest rates this year, because the sub's main objective is to lower inflation, and they do that through interest rates. And you might argue that, but when they increase interest rates, then they're increasing our cost. We're becoming poorer. They're hurting the economy. Then, I mean, that's true, right? But they are aware of that. But the way they look at it is that inflation is a tax, and it's mostly a tax on the poor. And so imagine someone who doesn't have a home loan or any form of debt. They're poor. They're so poor they can't afford debt, right? So that person, when rates are increased, they're not really affected because they're not carrying debt. Right? The people who are affected by high interest rates are the people who, I guess, middle income and high income earners, right? So the way they say it is that with inflation hurts everyone, but disproportionately the poor, because the poor will spend more on maybe food than on savings, because they don't have money to save, right? So by increasing interest rates, they are in a way hurting the middle class and the rich, in a way to try and protect the poor by decreasing inflation.
Okay. No, that actually does make sense, because I mean South Africa has a lot of people who are just on the poverty line. So it's important that they are also protected. So So I think you've explained everything so well. So maybe we can actually now start thinking about, okay, since things have been looking like this, portfolio red. Okay, some are doing well, some are not doing so well.
Yeah.
So what do you think a person should do? Like a person who is just investing on their own. I mean, some people actually have what are they, brokers or investment? What are they called? Or financial advisor, all of those people who help them with their portfolios. But with me, investing on my own, maybe on easy equities, for example, what should I not do at this stage, and maybe what should I do?
Okay, in terms of what you should do, right? What I'm really, excited about at the moment, commodities, commodity shares. We're seeing that.
And multi-commodities,
oh no, sorry. I mean, maybe companies that let's say mining. Yes, if we turn to South Africans, they'll get it. If you say
gold,
maybe platinum, gold, and so I was saying commodities because they are what you call inflation hedges. So these are things that usually do well when inflation increases, and we're seeing inflation increase. Okay. So you want to be in those companies that will tend to do well when inflation increases. It's mostly commodities.
So but if you are in those, so you invest in those companies now, and then things go back to normal, are you not then in a worse off position? Or then is the point just to say, for the time being, to protect my investment, let me put it here, and then when things get a little better, then I can put it in other things that are doing well?
I think it's important to say that it also depends on why you're investing, right? But in most cases, this is an always changing environment, right? So if you think certain things are going to go up, ideally you want to be invested in those, right? But when you think they're going to go down, ideally you don't want to be invested in those, right? But the problem is that it's hard to determine when things are going to go up and things are going to go down. That's why we always preach that investors take a very long investment horizon, right? So knowing that even if you do not do anything now, right? But you can afford to not do anything now if you're investing for the long term. Right?
Yeah.
So if you are that type of investor who's investing for the long term, you can, and if you feel like you can ride the wave and and see your portfolio being 30% down, then do
It
that.
actually
then.
happened to me, to be honest with you. Vugile, my portfolio was, I think,
Yeah.
not so, because I diversify, which is
Yeah.
actually quite important.
Yeah.
My other, like the Zara account on my Easy Equities, that was dropping me properly. But the
Really?
others were actually on a positive and a proper positive.
Yeah.
So I think it also highlights the importance of diversifying your investments.
Oh yeah, no, definitely,
Yeah.
definitely. But I mean, as I mentioned, as I mentioned earlier, if you can ride the wave, then do ride it. But do expect that there's likely going to be more pain going forward, right? If you are looking for changes, I'd say put your money in commodities. Put some of your money in cash, actually, because I mean, with cash you're not getting a big return, but at least when everything is going down, then your cash will just be there.
And you have an opportunity to go and purchase the things that are now
cheaper. Yes.
Exactly. No, I
So I mean, going back to what you said, what are your shares that have gone up and what's gone down? Maybe we can chat about.
So I've got one big share on my USD account.
Yeah.
And that's Pfizer. So Pfizer
okay.
didn't really. I think it's on like 41% right now on my portfolio. So
yeah.
it's carrying. Then I have
carrying everything.
Amazon and some small US company, a tech company, but that is like 70% down, and I'm so happy that I didn't put a lot of money there. So Pfizer is carrying that portfolio.
Yeah.
And
Oh no, sorry, no, continue.
I was just saying, so Pfizer is carrying that portfolio, so that's why it's on a positive, because the larger allocation is on Pfizer.
Yeah.
Just a low amount on Amazon and that other company. I think it's called Rapid. If I'm not mistaken, I forgot the name of the company. And then with my TFSA, I have S&P 500. That's been okay. I think 16%. You know,
it's down by a lot.
But I mean, 16% is not bad, because it's not a minus. At least it's it still returns.
Sure.
And then also, what do I have? I also have Citrus 40. That's been doing very well.
Yeah.
Well, not very well, but it's also been okay.
It's holding ground.
And then I have Nasdaq. That is, I think it's like on minus 13% or something.
Yeah.
But because I diversified, then it's my TFSA is still on a positive, my USD is on a positive. Then it's that individual stocks on my Zara account that is not looking very well, but actually I have 10 stocks. 5 are doing well, 5 are not.
Okay, so I guess on average.
Yeah, so I'm not really crying about it. Like, I'm not at a loss or anything like that, because I did invest for the long term. And I think it's important to highlight this at this stage, to say, I always say people must invest money that they know they're not going to need anytime soon. Definitely. Especially if you're saying you're investing for the long term. Don't take imali wazi in the next few months I'm going to need it. Maybe I'm saving this to deposit a car. Let me put it in Easy Equities. That's going to be an issue, because then when it's on 30%, you need to go and buy the car for 100,000, so no 70,000, you don't have a choice. So I think it's important for people to understand that don't use money, you're an investor, that you know that you're gonna actually need in the short space of time. And when your portfolio, how is it looking like? But when I feel maybe yours is
no, Chef. I mean,
we have kids.
No, it's not even that. I think I was lucky that I had to divest out of the US, because I had a big US tech allocation, but I needed the money. I was going to need the money early this year, right? So I took it out in December last year, and now I look like a genius.
That's actually quite good. Can you see, guys?
No, it was like I wouldn't even try to.
But we keep paying early, knowing you're gonna need it now. But we keep paying with December.
Oh no, I needed it in beginning of the year. So I mean, I'm not saying I had foresight here. It was just pure luck. But I do look like a genius now, because I pulled out too in. I mean, going back to yours, I think it's it's interesting what you mentioned with the performance of Johan. I think Pfizer, it's easy to see why they do well
definitely, yeah.
during this time. With the Nasdaq or US tech in general, we saw that during the pandemic, I think we got overly excited about the role of tech during the pandemic, where people were working from home and not traveling as much. And tech was useful. I mean, don't get me wrong. We were able to do work calls on Teams and Zoom, get entertainment on
and
Netflix.
Those stocks shot up about Zoom.
They did. But I guess as things normalize, we're starting to realize that, well, maybe people still want to go out and have drinks and not sit on Netflix.
Oh, so they're being affected by that.
Yeah, there is that. There is that because there was, I guess, overexcitement during the pandemic, and now we're seeing things correct a bit. And we've also seen the rand weaken, which bodes well for you if you're investing in the US.
Actually,
so that's partly why then your portfolio is doing great now.
So tell me, monkeypox, is it doing anything to our portfolios? It is not affecting us in any way. Because when I saw Guti, we had a first case in South Africa, I was like, are we going to have another pandemic?
Sure.
But it seems like there hasn't really been much.
Yeah.
And with the other countries, I know UK, it was affected by it, but I'm not sure from an investment perspective if it really had an impact.
No, I think if it did, it was probably short-lived, maybe for a few days. But I don't think monkeypox is a bigger issue than maybe COVID at the
because you just have boils or low boils, or so you can still work, you can still be productive. So it's not really much of an issue.
And I guess the way it's transmitted, because I think you transmit it through close contact.
Okay.
So it's nice to know that you don't have to be walking around and then you won't be walking around and you catch it. So
because I thought it was also airborne, so I was like, oh my gosh, are we going to have to go back to wearing masks now? I thought we were free from that.
Yeah, unfortunately not.
But
I've seen that some people are still wearing their masks, so some people are liking this way of doing things.
In the mask, I was like, I'm going to continue wearing my mask. But then all of a sudden, I'm like, oh, I forgot my mask. And I was like, okay, actually enjoy breathing this air. But I think we've covered quite a bit today, and you gave such great insights. And thank you so much for that. Do you have any concluding thoughts?
Well, thanks for having me. I guess my only takeaway is that it is really important to have something put away if you can afford to. It doesn't hurt to have some money put away.
Okay, all right. Thank you so much.
Thanks for having me.
Thank you for honoring my invitation. So I hope you have enjoyed the video today. I just wanted to say, the last video I did, I said I was going to announce the winners of the books. So we've got 3 winners. Usnethemba Kumete, Upilile Ngubane, and Miriam Rampeli. So congratulations to you guys. Your books are coming your way very, very soon. And I hope you enjoyed the video. Please subscribe if you have not done so. And I will see you on my next one. Cheers. Bye-bye.